You've got to remember, we've been talking about the merge for 5 years.
Okay.
So, you know, let me be the skeptic. This is my largest position right now. ETH has moved up and put it at the top of the heap of my 32 positions. I'm a skeptic till I see it happen, because you got to think about who loses in the merge. You know, and if you're a miner right now, you're not loving this merge idea, and there's a lot of capital tied up in that. And so when it happens, I'll believe it. But we have seen this thing punted down the road 5 times. So what makes you so confident it's going to happen?
Hey guys, welcome back to the channel. Today we have Kevin O'Leary on the coming cryptocurrency regulations. O'Leary says that crypto policies, even only on Ethereum and Bitcoin, will bring in capital. He has seen that the sovereign wealth wants Bitcoin and the volatility that comes with it. In the short term, the demand is for 2 to 3% portfolio average. Sovereign wealth has very decentralized assets in their portfolios, and because of this, it will take a while for indexers to want to purchase Bitcoin. O'Leary believes if regulations were immediately put into place for Bitcoin, its value would skyrocket. Let's check out this interview with Kevin O'Leary as he talks about Bitcoin and the effects the midterms will have on upcoming crypto policies. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Well, they get somebody in Washington to say that's okay if you're a public pension plan. They need the policy on crypto in the sense, even if they only regulate Bitcoin and Ethereum. And so many people in the crypto world are against regulation, but I say that's false. If you get regulation, you get more capital. You've made a great case right there for why we want policy on Ethereum. When I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin. And they want that volatility. I think for financial services, I agree that the gas fees are a joke. That's the problem. This will help solve for it. But if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1 to 3% of a portfolio, a standard. These sovereign wealth portfolios look like this: no more than 20% in any one sector, no more than 5% in any one name. So you're never going to find, you know, Boeing or Bank of America more than 5% in a $900 billion fund. All the indexers know that. It's a really standard format. When you ask them, if you could buy a digital asset, which one would it be and what allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end. And 99% of the time they say Bitcoin. That's all they know. And so it's going to take a while for that demand to come. And I think it would be number 2. And they certainly like USDC, and they love Solana and Polygon. You go down the list based on market cap. I get it. But right now, if we had policy on Bitcoin, I swear to you, the price would be $60,000 in 2 weeks.
O'Leary says that the reason why he is currently long with volatility is because he has 20% of his working company's assets in crypto distributed through 32 different positions. He has researched this strategy and sees that there is a large amount of interest in it. The benefit of being long before a regulation is released is the indexing. This is because demand for crypto will be unquenchable in sovereign wealth and pension circles.
The reason I'm long now with all this volatility, we have 20% of our operating company's assets, that's our max, in crypto across 32 positions. I'm about to add Pollen, which is a decentralized telco. We've done a lot of research on. We like it. We think there's a lot of interest there, but that's a really fringe project. The point is, I'm trying to get ahead of the day, because we're all agreeing that at some point we're going to get policy. I need to be long before that happens, because that's the reward you're going to get, is when that stuff gets indexed. And whoever gets to index it, the demand for at least Bitcoin and Ethereum out of the beginning is insatiable. It is insatiable at the sovereign and pension level. As for all the skeptics that are, you know, don't like crypto, they're going to watch that asset move into an indexed price, which I think is $60,000. The ADGM, which is the, let's talk about the UAE, because this is a fantastic question. Last month, I got my UAE citizenship, and I did that to go through the scrutiny of the background checking so I could act as an operator and an indexer in that market and a financial services entity. And so that was a lot of work, and it was worth it. I've been trying for 3 years, and they don't grant many of them. So when you look at UAE, It's Abu Dhabi is 95% of the capital. So you have to operate out of there. It's called the ADGM. And they set policy on crypto. They grant licenses for exchanges. But here's the thing that they won't do. They will not, let's call it, jump hop the SEC. They will not do this and make it a standard for their own sovereign wealth before the SEC gets a chance to move. And the reason for that is really political in nature. The largest manager of sovereign wealth in the world is BlackRock. That's Larry Fink. He's not going to do this until he gets the go-ahead from the SEC. And so they're not going to ever mess around with their largest manager. And Larry's telling them, and I'm speculating this, okay, I don't know this for certainty, but he's saying, let's just wait. Because when we get the SEC to approve this, whatever approval it is, and we'll build you the infrastructure so you can mark to market it so that you're staying compliant in your mandates, then they're going to put on their waiting. And so I think this thing is going to happen after the midterms, after we get the policy on stable. They're going to start looking at Bitcoin. I don't know which regulator is going to get to regulate it because there's a turf war going on. But if you're a speculator and an investor like the three of us are looking at this, and you, both of you guys are so down the rabbit hole as I am, I need to be there ahead of this decision because it'll happen quickly and you won't be able to put on your position and the market will move against you so fast. I am extremely optimistic on Bitcoin and Ethereum over the next, call it 24 months. And the way you should measure your enthusiasm, or curb it maybe, is they struck down the Bitcoin ETF just weeks ago, even though the Canadians have one. And I believe that the OSC, which regulates the Canadian ETF of Ethereum, which is mark to market real Bitcoin each day, okay, they basically are the petri dish for the SEC. They work so close together. In Canada, for example, you know how Coinbase is at war with the regulator right now. There's a company called WonderFi with 700,000 accounts, 720,000 accounts regulated by the OSC. Canadians are allowed to trade 14 different tokens legitimately regulated with the authorities being tax reported. They're so advanced, and we haven't even got there yet stateside. And so I think they're using Canada. UAE is talking to the OSC. Why do I know that? Because I own that company, and I showed them the order from the OSC. And I went to Abu Dhabi and sat down with the ADGM and said, why can't we use the Canadian order and build it here? And they are thinking about it, but I know they're hesitating because the FAB Bank is the largest bank in the UAE. They want the central bank to regulate by second quarter 2023 after the midterms if the House flips. You get the Republicans on this, they're way more pro-crypto. Most of the bill initiatives are coming out of red states, and I don't want to be political. But if you get the House flipping, they'll put that on the agenda. But don't expect every token to be regulated. They're going to focus on the market capitalization and say, here's policy on Bitcoin, here's policy on ETH. I think you want to be long after November 8th. I mean, everybody's got to speculate on what to do here, but you've seen the winter at the bottoms. We're slowly crawling out of the toilet here. Your portfolios are up, 20, in some cases 23%. I mean, our 20% position went down to 15.2. That's pain. That's pain, my friends. And our desk was saying, what do we do? What do we do? I said, we do nothing. Where we know we're in this volatile asset class, and we're going to have to wait for some policy. That's why whenever I talk about crypto now, I'm pro-regulation. I want the sovereigns backing me up with a bid every night.
O'Leary has noticed that the UAE is placing crypto regulations and permitting exchange licensing. The UAE will not be making this a requirement for their sovereign wealth until the SEC makes its next move. O'Leary says we are in the middle of a crypto regulation dispute, which means investors need to quickly establish their position in the industry or the market will forcibly move against them. If the political house flips, a crypto bill would be put onto the schedule, but they will mainly be concentrating on market capitalization. O'Leary advises to become long by midterms because we are gradually emerging from the depths, and all we need to do is wait for crypto regulations to be put in place. What do you guys think about Kevin O'Leary's take on the importance of getting his positions in cryptocurrency established by November? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.